Welcome everyone, this is Michael Lee with Stock Picks Made Easy, Market Outlook for June the 12th, 2017. And this week we're going to look at the S&P 500, we're going to look at the UK top 100 shares, and we're also going to look at the Australian 200 shares chart as well. And how do we do that? We actually look at cycles. So anyone not familiar with Stock Picks Made Easy and how we trade based on seasonal cycles and historical events, going back and testing this over 100 years. And what we've found is a regular pattern in history. It doesn't always exactly rhyme, but it does repeat. And we can show you that through some of the analysis work that we do when we take trades each week. So for this week, I'm going to show you one of our potential trade setups that we've got in our trading journal that's on our website for members. And then also going to have a look at what what Apple was doing on Friday, and also Facebook. You know, these are very popular stocks. They've been going up extremely high. And we had a similar tech bubble back in the late 90s and early 2000 before we had the bubble that crashed. So we are seeing a bit of weakness, but right now the market's up. So you've got to go with the trend. But we like to identify when those trends are about to change, and then also take advantage of that information, and then trade with a view to actually make money in and out based on the seasonal cycles. So this week we're going to have a look at the S&P chart right now. So here's the chart here. So last week on our market review, we actually called the market to go somewhere like this and then back down and maybe test this level. It didn't quite do that. But on Friday, we had a massive rally there. And when I say rally, it rallied up to new highs and then it also come back. So when I'm saying rally, that means the market went up, went to new highs it had never been to before, and then in the afternoon it started selling off and people were taking profits, and then the institutions, the large banks, they're the ones that started buying it up again because they don't want to see this market come down yet. So let's have a look at also the 5-minute chart to give you an idea of what happened. And this is the open. So this is the US Open Friday morning. It went up until, for the first probably couple hours, reached all-time new highs at 2,446 it was, and then a big sell-off. You know, it doesn't seem like a lot, but that sell-off dropped 30 points, which is 1.5%. And at the very last, probably half an hour to hour, the fund managers bought the stock back up, bought these shares, and we're seeing them as bargain prices. But there is a lot of action, a lot of volatility we're expecting through the month of June, and then we're seeing that weakness until about the 24th of June. So again, anything's possible, but right now we are seeing a lot of setups where they talk about momentum, technicals, which is where the charts are showing us warning signs of what's likely to happen in the market, and we're seeing that in some of the major stocks and indices. We looked over 1,000 stocks, 1,000 charts over the last week, and the setups are very similar. So let's have a look at the FTSE, which is the UK 100 top shares. So we posted this as a sell signal in our journal a couple of weeks ago at this level here, and what we're looking for is we're looking for it's reaching all-time highs, but seasonally, if you can see here, during the month of June, seasonally this is pulled back on average 3.3%. So seasonally it's just a drop. So we're expecting from these peaks right now to drop 3%. Right? And so a 3% correction brings it back to these key levels here, which is anyone that knows about Fibonacci levels. If not, that's also fine. But Fibonacci levels are a key retracement in waves of emotions and human behavior, and it's been studied in the market, and so we actually get to see these levels tested with regular occurrence. And so if we look at, it's also what they call a memory. If you have a look here, previous, what we call support, previous support here again, previous support, and then also again back here. So it's quite a significant level. So we are seeing by about the 24th of June, we are expecting the FTSE to come back, but we did have the election that may have upset, the possible momentum of the FTSE's performance. But we are confident to see that pulling back as I'm speaking right now. The actual FTSE futures are down about 30 points. So once it breaks this level here of 7,434 points, we are expecting to continue down. But again, that's one of our trades, one of our setup for our members. And the other interesting thing we talk about is momentum. So here it is, here is just a crossover. That's a crossover of the MACD or moving averages, and so we are seeing some weakness in here, but we do expect the FTSE to go back up in July. So again, it's just we're going to monitor this each week, but we are definitely seeing some weakness in the FTSE, but we're not overall bearish on it at the moment, which means we don't expect it to drop fully off yet. Okay, so let's have a look at the Australian market as well to see if we can see a similar pattern right now. So here's a look at the Australian AS200 or XJO, but we call it the Australian 200 shares, the top 200 shares. And we're looking at a seasonal pattern right now. So it's been trading in a channel. So you can see these blue lines. This is a current long-term channel. And if you have a look at last year, we talk about patterns and seasonal movement. Here we go from last year, right? Seasonally up, back down through the month of June, and then rallies up through July. Right? So what do we got here? We've got a similar setup right now. So there's a seasonal pattern, up until the early May, going up to the peak, pulling back, and here we are in the middle of June, and maybe get a little bit of a move up and then pull back down here. So again, we're seeing a similar pattern, but not only that, we're also getting significant what they call support. So here's support previously that was tested back in July and August last year, bit of resistance and support around these levels, testing it again, so we are expecting it to pull back to this level here at 5,576, or sorry 97, but also there's resistance up here as well. So just following the seasonal cycles, looking at the weakness in these markets, we are expecting the Australian market to slightly pull back as well. Now we also have a look at other charts right now, and we're looking at some of the NASDAQ, which is the tech stocks, which is leading the US market, which has been booming for the last probably 5 or 6 years. So here's a look at the tech bubble. If anyone recalls, or probably heard about it in the 1990s, we had this explosion of the internet stocks, right? All the way up, explosion. And so then we had a big crash after that, a pullback, top of April 2000, pull back down until about October 2002. And from there, this started where this was the bottom of the market, where we had it back in March 2002, and ever since we've done a similar pattern what we did in the 90s. So we've had an explosion of the tech stocks, led by Amazon, led by Facebook, led by Twitter, led by Apple. So led by some of the major tech industries in the US. So what we're also seeing, there is weakness in this as well coming into it. The trend is still up, but there was a sell-off on Friday afternoon posing a bit of a pullback, and there's a trend line, and here is what we consider fair value back to the 5,000 mark. Here's a closer look at the Apple chart, which you can see a similar thing, right? Moving up seasonally up until July, goes up until just the middle of July here, then it starts pulling back, and that goes up through late October and then pulls back through the Christmas period, which is normally a strong period as well. And then if you have a look at the movement, we've had a strong move up without any real pullback, and Friday afternoon was warning signs that we could be seeing this correction starting for this month. So if that's not having a look at a similar pattern, let's have a now look at Facebook. Again, Facebook, all it's done is basically gone up, a little bit of a pullback, and continuing going higher, constantly going higher, right? Here's a bit of consolidation last year, and then it's moved back up. Interesting that you see that Apple was down, and this was a period where Donald Trump, we call the Trump rally, when President Trump was elected. So it was interesting, you can see the patterns with the tech stocks actually went against the rest of the trend. And they might even lead the way here. So seeing what happened on Friday, we had this sell-off in Facebook, the rest of the market as well. So we get continued weakness early in this week. We may see a bit of a continued follow-through of selling pressure and some of the larger big fund managers taking profits. And also what we have down the bottom is this what we call MACD turning negative. So it's another just indication. Again, the momentum's up, but we could see this stock moving back to about $144, and if it breaks that level, then this is the next level around 133.39. Now the next chart you're going to look at here is a setup that we've given for our clients. and this was posted this week in our members area, and this was exactly the same kind of setup we're seeing in the tech stocks. All the charts we're looking at with the setups showing that there was going to be some kind of selling pressure and taking some profits at these levels because we're getting to key levels. And one of the reasons we liked this one as well was the setup. We had what we call the crossover of a moving averages confirming selling pressure. We had this turning negative for the first time as well after being peaking, and then we had this big sell-off, this big down bar. And now then what we also look at is when we look at the art of numbers or the study of numbers, which is using Fibonacci numbers, this brings us back down to key levels. And that key level is 57.50, so there's a $4 move potentially to drop. But then there's a target zone which comes back to these key levels of Fibonacci here as well, which is $50.18. So we have a target between, say, $50 and $47 as a potential pullback before prices start moving higher again in the tech stock, but in particular this stock. So this is one of our trades that we like and gave to our members to have a look at our trading journal, and this is a trade that we're going to be taking this week. So I hope that information was of value, showing you a bit more about the study of the cycles, what we look at when we're looking at trades. So please look, check out our website at www.stockpicksmadeeasy.info. Thank you for watching. Have a great day. Talk again soon, and bye for now.